Hello guys, I hope everybody's doing well. I just literally recorded a great 23-minute video, and because I wasn't using Zoom before, I was using Loom, I could not download that video. So it's fine, I'm just gonna make another great video, no problem. So to start with FX, the first of all, we have our normal pattern that we usually look when we look to sell, right, or buy. And we'll post this on the group, on the either the paid group or the discussions group that we have. A high, a low, high, lower low, and when price comes back to this bearish order block, you'll look for a sell pattern, which is like a snipe pattern on the lower time frame, which looks something like this. And then this should obviously come to an order block, and then you take your entry around there and aim like 1:5. I don't know, depending on what you do. That's the basic thing that we have been doing. The purpose of this video is to allow you guys to get into more trades, because I've currently looked at the market, and sometimes when this type of order block gets sent, I don't find any lower time frame set up there. And if I do, sometimes it doesn't always work, but obviously the strategy works, yes. But sometimes I don't always find that high probability set up there. Sometimes the market will just go through there. Through severe backtesting, I have found us another high probability setup where the market is likely to reverse. So, without wasting any time, let's go to our first setup, the Quasimodo pattern. This pattern is similar to a head and shoulders type pattern. It's a high, low, higher high, and instead of being level with this low, it creates a lower low. And when price retraces back to that line, once price touches that line, anywhere around that line, you're going to look for a lower time frame pattern on the lower time frame. Which lower time frame? Anywhere between the 1 minute to the 15 minutes. But just for starting out, I recommend you guys go for 5 minutes, max 15 minutes. Okay? Then we look for TDI divergence. Well, what is TDI divergence? Simply put, when price is making a lower low like that, and the TDI is going in the opposite direction, or if price is going higher and the TDI is going lower, you will look to sell or buy, depending on the bias, when price closes below the 13-year MA. So you'll get your TDI divergence there, and when price finally closes below the 13-year MA, you'll take your entry. Stop loss can either be above the previous candle, or it can be just by this high here, or a little bit above that high if you want to be safe. And then this setup works so much. So what you want to do is you want to highlight a SR flip line, which is support, resistance, flip. So this was a support here, now it became a resistance here. On the lower time frame, for example, 5 minutes, you'll look for a sell pattern there. For example, this TDI pattern, a lower time frame snipe pattern, etc. Or you can even look for a Wyckoff type pattern, something like this, but we will explain Wyckoff in later videos. Or you can look for a higher time frame breaker block, which is an order block which was formed, which could have been formed here, for example, due to a breaking structure, and you waited for price to come back, but oops, price didn't come back, broke through right through your order block, and then it came back there, and you look for a lower time frame pattern. So without wasting any time, gents, let's go back and do a great video. So, first setup, I told you guys, SR flip line. So Baker, what's the point of this? Well, the point of this is, guys, on the group, you would have normally seen this order block here, because this order block was the last sell candle before price broke to the downside. So you would have originally done this, and you would have waited for price to come back there. But toodles, price didn't do any of that. Price came to the SR flip line. And what did price do at the SR flip line? Well, let's find out. In this instance, we actually had another entry back there, where price created a high, low, high, high, lower, low. and all we did was price broke to the downside and retraced back to the order block. If you missed this entry, it's fine, don't worry about it. But we had another entry right here where price broke to the downside, retraced back to an order block, and then we sold. But let's say, the market didn't get me in there. Plus, you don't want to enter on candle closure below the 13 EMA because, I don't know, the candle's too big. Maybe you can go to a 3-minute. And enter here where the candle closure wasn't that big and put the stop loss maybe there. You would have definitely got your 1:3. Easily. Okay, so let's go back to the 5 minutes. Let's go see another setup. Okay, so check here. We had a resistance here. Price broke right through that thing. Touch this around this place. Now we're looking for a 5-minute pattern. Remember that. So we go to the 5. So remember, we marked the RS flip line on the 4-hour. Now at that RS flip line, we're looking for any confirmations that we can get. Okay. So what do we see here? Here we see a reversal chart pattern. If you didn't catch it, it's fine. You would have still got in because here we had a high, low, high break structure to the upside, stop loss below there, and we got our 1:3. So do you see how at this higher time frame SR flip or S flip line, we still got into this trade? But if you use the normal strategy of just waiting for it to come to the normal order block, you may have not gotten in. Which is why I say, guys, you should always read trading psychology books such as Trading in the Zone, because it teaches that always got to backtest your strategy more, because sometimes the market can change, sometimes the market can do this, do that. But the base strategies at the end of the day will always work. But there will always be more ways to improve your strategy as time goes by, which is why backtesting is vital. Okay, let's go to the 4-hour again. This is not a lie, guys. So remember, what are we looking for? RS flip line, SR flip line. You're looking for a breaker. You're looking for a SR flip, RS flip zone. Okay, cool. Here, we got a breaker block. Same place as the RS flip zone, SR flip zone. Same place as a breaker over here. Now what do we do? Go to 5 minutes. We don't waste time here. What are we looking at 5 minutes? We're looking for that TDI divergence. We're looking for that snipe pattern. We're looking for a reversal chart pattern. Okay, now let's do this. Okay, so check here. The market, well, price went higher. The TDI went lower. We have TDI divergence. Where do we enter? Candle closure below the 13 EMA. Stop loss above the previous candle. But if you want to be safe, you can put it above there. Because I'm a safe guy, I put it there. I could have made 1:5 where I actually made 1:3. But it's fine. Doesn't matter. I go for 1:3 because I want to get lots of 1:3s over time. Okay. We had another break of structure to the downside there. Price never went there. It's fine. We had another break of structure to the downside here. We waited for price to retrace back to the order block. Then boom, we made our 1:3. Then yeah, the market would have done its own thing. What do we do? Go back to 4-hour. Let's go. You see the strategy is working. Remember, what are we looking for? We're looking for an order block, which is what AND normally does. And you'll do the same thing on the lower time frame there. We're looking for a breaker block. We're looking for an SR flip line. We're looking for an RS flip line. Or we're looking for the zone, which is basically a flip zone, if you want to call it that. Okay, so let's not play any games. Okay, here we've got an SR flip line. but we've also got a breaker. That's even more confirmation for us. What do? Don't play games. Go to any time frame between the 1 minute to the 15 minutes. Don't restrict yourself to a lower time, like a specific time frame. It really doesn't work, guys. It really doesn't. Trust me, I tried to do that. What do? Now we go there. See, it's the same thing over and over, guys. The same thing over and over. This is why trading is boring, guys, because with trading you have to be consistent. You have to look for the same setups over and over. It's not a fun game. Good trading is actually very, very boring. We're trading like robots here. We got our breaker, a short flip line, or a flip line. Check here. TDI made price go high, was higher here. Price is higher. TDI is lower. What does that mean? That means we can have our TDI divergence setup. Price above the previous candle. So if you want to be safe, you can put it there. Put higher. 1:3. We got it. Nice. Here, we actually would have gotten the setup, but if my stop loss was like this, which is what I would have put my stop loss at, I would have not made this entry. But if I made my stop loss above the previous candle, you could have even gotten 1:4 here. 1:5. It was falling out. So this is basically just showing you guys the power of the strategy. TDI divergence, candle entry on candle closure below the EMA. But this is a very controversial one, so that's why I even marked it. I was even willing to say, oh, maybe I would not have gotten this. Okay, loss right there. And this was one that I actually took, which was a nice one. TDI was going lower, more higher. Price was going lower. Entry on candle closure below the 13 EMA. You got your 1:3. Beautiful stuff. Over and over, guys, you're literally doing the same thing. 4 hour. What are we looking for? We're looking for a breaker, a short flip line, or a flip line, a flip zone. So now we go there. We find that we have a bullish order block there. You probably would have gotten this on the group, but it's in line with the RS flip line. What do? 5 minutes. What are we looking for? That normal snipe pattern. We're looking for a reversal pattern there. We're looking for our TDI setup. Now let's go. Okay, check here, guys. We had TDI divergence here, but it was in line with a snipe, so we just took it at the entry. We lost the setup. So take it as -1. But here we had TDI divergence. TDI was going higher, price was going lower. Entry on candle closure above the EMA. You can put your stop loss below the previous candle. 1:3. You got it. So you plus 2R. And remember, guys, you only need like 5 RR, 5%, yeah, if you want to pass your FTMO challenge. So just put that into perspective. If you just get 3 RRs and you have 3 losses, you've got your account. Not just gonna go to the 5 minute straight. But you see, guys, look, it doesn't just happen. Look at the pattern I was showing you guys. Look here. We have that Quasimodo pattern that I was putting you guys on earlier about. Quasimodo chart pattern. It looks like a type of head and shoulders, but it breaks structure to the downside there. Also, even if it is a head and shoulders, when price retraces back to this line, look for a lower time frame pattern there. It don't always look like this, but this is the rough picture that you're looking for. If you have a Quasimodo pattern or a head and shoulders type pattern, go to the lower time frame on the 5 minutes, 1 minute, 3 minute, 15 minutes, whatever suits you. Maximum 15 minutes. 5 minutes is like a nice one. And look for lower time frame patterns there, like a snipe pattern, TDI divergence, etc. Let's show you again how well this works. Here, we have an RS flip line. What do? Go to lower time frame. This is the higher time frame, RS flip line. We've got TDI divergence check, but this candle is way too big for me to enter on candle closure below the 13 EMA. So what I probably would have done is I would have waited for price to retrace back to this order block and then buy it there. But guys, check here. Let's say you got in when this big candle wasn't here. Okay, I'm being very objective now. So let's say you took it up to there. Okay, if you look here, we had TDI divergence. So we would have said, okay, enter on candle closure above that candle there and put stop loss there. What you will see is you would have lost. So you would have been, trade one would have been -1 RR. Okay? Here. If you looked at it at that way, depending on, I'm showing you guys how profitable the strategy is, even when you are being objective, which is when you have to be. It's like the prudence principle in accounting. You have to be objective, because otherwise you're not accounting for real life situations. So first you would have looked for that, but guaranteed you would have been taken out, boy. You would have been taken out. So -1 already. But then when price created this breakup structure to the upside and retracement back to this order block, you would have gotten your 1:3. So for trade 2, you would have been up 3R. So there, profitability right there. Yeah, I was actually looking for when it lost. I think this is where it is now. Because I want to show you guys an example where the strategy lost. So here we are TDI divergence, enter on candle closure above the 13 EMA. We were in profit for a bit, but then we got stopped out. So that's -1R. Here, same thing. We're on -1R again. So -2R for this setup. But the other setups, guys, remember, you were up like 2R, you were up 3R at one place. So when you look at the market, always look at it in terms of objectivity, or in the long run, are you going to be profitable? Even if you lose 10 with risking -1R, and you win 5 trades only with 3R, you're going to be profitable. That's the type of mindset you need to have when you look at the markets. Trading in the zone, I've made good notes for you guys. I will share them sometime. Trading in the zone teaches that with the market, you have to be extremely objective. And the market doesn't know you are, doesn't know where you're from, does not care about your feelings. You just have to trade with that mindset. So check here, guys, again. We have this line. Doesn't it seem weird that it literally just went to that line and formed the pattern there, then it's respected? It's beautiful, guys. It doesn't just happen. This is a diamond setup. Well, people will call it a head and shoulders. Head and shoulders is when it actually comes to that specific line there. If it doesn't come to the specific line, it's a diamond. And if it breaks above, it's a Quasimodo pattern. So check here. Here we have an RS flip, while at the same time we've got a order block. And guys, once again, I always say, don't just pick the specific order block. If you pick the specific order block, you wouldn't have got anything here. And then you would have cried and you'd said, oh, the strategy is this, that. That's why I take this whole area. Take this whole area right here. Take that whole order block, this blue one there. Because that was the order block right before that structure was broken there. And if you took that, you would have got in. And check here, it's also in line with the RS flip line. What do? Go to the lower time frame. What are we looking for? TDI divergence snipe pattern, and any other reversal chart patterns you can find. So check here. Price is going lower, TDI is going higher. What do we do? 8 candle closure below above the 13 EMA. We would have gotten our 1:3, but after some time, it's going to be a ride. But guess what? It's only one day. It's not that bad. Check here. Price is going higher, TDI is going lower. Plus, we had our normal pattern, so that's even more confirmation. The normal pattern we usually look for, we had that pattern, and we had even more confirmation. So we would have definitely taken that. You would have gotten your 1:3 definitely. So check here. Trade 1, you lost -1 R. Okay. Trade 2, you got 3 R. Okay. Trade 3, you got 3 R because it was profitable. And then here the market went lower, TDI went higher, 8 candle closure above the 13 EMA. This would have been a weird one, but I think the entry is actually there actually. And then you would have gotten your 1:3. Because there's where price closed above the 13 EMA. Enter there. But there was also even another entry when price broke above there. Came back here. And then you could have gotten 1:3 again. So trade 4. That was a very nice one. Well, whoever took the setup, they would have gotten their Ethereum account then and then. So net RR, you always look at your net RR guide. Because a lot of people will see, oh, I lost 10 trades. But if you can still be profitable if your net RR is good. So here we've got 3 plus times 4 is 12 minus 1, that's 11 RR. And just to show you guys an example, okay? Let's say we lose trade losses, okay? Let's say we lose 20 trades, so minus 20 RR. Okay. Let's say we win 8 trades, okay? So that's 8, 16, 24 RR if you're using 1:3. So your net RR will be 4 RR. But then what you guys need to know is the market is like mathematics. Probability is not in a specific order. So in essence, you could have a loss, 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 loss. And that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay. Then you could have a win. But some people, when they are on this loss there, 6th, 7th, 8th loss, they have the pressure and they're like, oh no, I'm never going to be a good trader. I want to kill myself. Our trading is a scam, etc. But then you don't know this is coming. Win, 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 win. And then you start getting excited. Then what happens again? You've got 11 there. So loss, 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 loss. Then you get depressed again. Then you say, trading is a scam. Trading is this, trading is that. Then you get a win, 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 win. And then, let's say you get lucky. Let's say you win 10 trades. So let's win, win. And let's add 30 RR to that. So you would have now got 10 RR, and then you have your setup. But check here, guys, if you stopped trading here and said our trading is a scam, you would have not seen the beauty of the probabilities. You have to look at trading as probabilities. As trading in the zone, Mark Hutchins said, I think it's what's his name is not Mark actually. It's different. Let's check trading in this zone also. Yeah, as Mark Douglas said, guys, trading is literally probabilities. You don't know the order in which your wins and losses are gonna come. But if you could even get 10 wins in a row, okay, and then you could get 20 losses in a row, and you would still be in the same place as if you got 20 losses in a row and 10 wins in a row. You guys, so I hope everybody understood the strategy. Please, if you have any questions, feel free to ask in the comments, in the Ant's Order Block discussions group, paid group, ask Anne, ask me. If you have any problems, please feel free to ask. Thank you very much for tuning into the video. Please backtest the strategy and let me know your success. Thank you very much.